What's happening, guys? I hope everybody had a fantastic long weekend. I hope everybody had a good Christmas, Hanukkah, whatever. I mean, happy holidays. Whatever it is that you celebrate, I do hope that you enjoyed, friends, family, and whatever it was that you were looking for. And as I said last week, I did not pick a winner for the t-shirt, so I will do that this week. I actually picked 5 of you. So I appreciate all you have to do. Leave a comment in the comment section of YouTube. Your key takeaway, the timestamp. If you write the timestamp, it'll actually allow other people just to click it and go listen to that point. That helps us. I've got my video guide just going through and taking you guys' suggestions and kind of creating smaller micro type content for Instagram and Twitter and all that stuff. So by you doing that helps others as well, because your aha moment was maybe something that they had missed, and it could be their aha moment. So anyway, the link in the description goes to the blog post for this scan. It has all the winners listed. So reach out to me, webmaster@investorsunderground.com. But there are 5 people listed there. As always, that's all you got to do. T-shirts, Icon Meals, scans, IU. We rotated all weeks, and so that said, I appreciate you guys participating. Everything that we've been talking about and prepared for and kind of been discussing has been working. To this point, we talked about the different cycles. We talked about the channels and kind of letting them exhaust one way or the other. We've talked about kind of focusing in on a few. We've talked about being more proactive with covers, especially if you're taking shorts in this market where, a lot of people are sort of focused on the same name, right? And when it stops going down, we usually see that late day kind of rally. Saw a lot of that last week. So it's really all the same stuff that we've gone over. So I try not to be, repetition over and over and over. Last week, I realized I was going over a concept, and I know that my mouse was not working. So I'll do that again here probably next week with another kind of, walkthrough just like that one. But again, the things that we talk about, it may not happen, the very next day, but it's good to know. So anybody that has been watching these videos over the last couple of weeks, especially last week, knew YGMZ was just a matter of time. And we had an 85% drop, right? We knew that EJH was just a matter of time. And lastly, we knew that WNW was just a matter of time, which also went off about 85, actually 90% off the breakout move. So that's big. That's a huge pullback. And it doesn't take much size to really score, especially when you have a small account. By focusing on those are 3 names that dropped 50 to 90%. You didn't need much size. Great way to grow your account. So anyway, if you did pay attention, you already knew, you already prepared, and hopefully you scored. If not, well, make notes. Price alerts. I always tell you guys to use price alerts. They will save you from all these things that we talk about, and then you forget about them, and then next week you look at them and you shake your head and say, "Oh, I could have nailed that one." You could have. But like me, you're probably going to forget. So take that excuse out of, your whatever you want to call it, your arsenal of reasons why you miss trades. Take that one out, and then you got one less reason to miss it. So anyway, I'm going to be heading up north this week. I plan to be there in the mornings. I don't know what time I'm going to head off. You know me, I always end up gravitating towards the computer. So if I am at my property, then there's a good chance I'll be around. But if we, get off for the day, my goal would be probably to get out by 11 and see what happens. There's been some great stuff, 10 to 11 a.m. So, just getting on the right side, letting those kind of things work. We've been focused on go-to in TAL, in EDU, less so on EDU. And then what I look for is relative strength or relative weakness versus the peers, compared to the peers. What are the peers doing? EDU's unwinding a little bit slowly. Go-to relative strength. It's actually been, kind of building and holding trend while TAL is unwinding. So which one do I want to focus on? Maybe I start into them all, but Tau rallies, fails, continues to go lower, scale, rallies, fails, scale. And the reason why I like to scale along the way is because, one, you're able to continue to scale into that winner, but on the same note, you're not adding into a loser. You're using the house's money. You're pushing the trade that you're prepared for, and you're following the one that's proving you right. Most people want to not miss that, next trade, so they start to pile on the other ones. Whereas go-to is continuing to stay strong. So your edge is not really there until it actually cracks and proves itself. And the reality is most people don't want to chase that move because they feel like it's a chase. But you can't forget how far that trend has come. That's why I get my confidence from the daily chart. Most people just see it and they're looking at the 1 minute or the 5 minute, and they can't get much confidence because they're like, man, this is a big chase. It's already down 30, 40 cents. How much lower can it go? Well, if you zoom out and you look at the situation that we've been preparing for, GOTU, EDU, and Tau, you know that there's a good chance that it could have that secondary unwind. So that's why Tau was my focus on Friday, and that was really the home run to sort of seal the deal for the week. Not to mention YGMZ and EJH, but again, I could always trade those larger. I have just chosen to kind of be a little bit more relaxed into the end of the year. Other than that, so topics, I had liquidation plays, I had scanners. Make sure you guys that are in the room, check out the scanners. I've already talked about last week how I feel like most people don't even realize the technology that we have built into the room. That's the beauty of building the room from ground up, literally from the first line of code up, is that, we're able to do a lot of other things that, other places, services, and, just everything in general, because we're pulling from everywhere. It doesn't matter if it's a chat room or a website or Twitter or FDA. I mean, we've got all of that stuff covered. But in addition, we've been building out scanners. So I hope you guys have taken advantage of those. Max has been hard at work. Obviously, we talked about the burst last time. So it's really coming together, and I'm having him do even more scanners so that maybe, you guys can create your own and share them, as well as, maybe kind of create the same as what I use on Trade Ideas and, other platforms like that, like Scans. And the last note that I had was New Year's, and I think we kind of handled that, but we've been talking about that since June and September, October. And so by now, at this point, you're here. So, if you were waiting for that last moment where it's like, all right, New Year's is here, I got to, change, well, here it is. But hopefully you guys took it seriously and started to make those little changes because, it's hard to go cold turkey sometimes, right? And you got to kind of, all right, this is my new rule. Then you break the rule. Okay, now I got to fine tune it. And it maybe takes 2, 3, 4 times to really, get that rule in check. Because as you guys know, you never really know how solid your risk management is until you're actually in the moment, right? We can all pretend that we have world's best risk management. But I've got a max stop because I don't trust myself. It's that one time that you're like, I'm going to let it go. Let's see what happens. And then your account's gone, right? So just remember that it's always a process. You've always got to fine tune stuff. Give yourself time to, really get these things, rolling before the new year. And, obviously we don't really have much time left. However, if you are making changes on January 1st, give yourself time to go through the process. It's not going to just happen, right away. As with anything, you have to build habit, right? You can go to the gym once or twice and then you don't go. But once you've been going for 6 weeks, 8 weeks, it's hard not to go. So it's the same sort of concept. So anyway, all right, let's get right into Scan for the week ahead. All right, guys, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes. If you're not okay with that, shut the video off. If you're good with that and you want to understand what makes sense for edge, what makes sense for risk reward, and all that good stuff, you're in the right place as always, and hopefully you benefit from the thinking for the week ahead. First and foremost, Ape. Ape was going to be the main watch, probably. Maybe it ends up being a good trade. Maybe it ends up being nothing, right? We've got dual 150 million plus days. We've got some good opportunities there. The last 2 days where it's gapped up, flushed down, also getting long. Had a gapper idea the first night that it had gone and ended up gapping up about 50% or so, 45, 50%. So it's been a great trader, long and short, but put the brakes on thinking like, all right, it's bounced too much, it's going to pull back. There's the catalyst, which is going to be the vote, whether or not they want to combine these two things again, and all of that. So whether that goes straight to a yes vote, or if it goes negative and then they're going to do another vote later on, it's going to be interesting to see how this thing plays out. But you got to give credit to Adam. I mean, he pretends that he's an ape. I mean, it's almost terrible what he's doing, but look, he saved it from bankruptcy, but he continues to pretend that he's the ape's friend. Meanwhile, he dilutes him to zero. So whatever. He's got his financial plannings. He sold his stock. He got money that he would have never seen if it went bankrupt. And, he pretends he's the man of the apes, and just keeps on taking as much money as they want to give him. Either way, AMC, Ape, they should trade opposite each other. Ideally, we see another gap up. Ideally, it goes towards twos and blows out. Maybe 220, 240. Sits back. I would be cautious getting too aggressive too soon. I would be cautious thinking that it has to pull right back. But as you've seen, there's great trades in it, both long and short. On Thursday night, I put the idea for potential after hours ripper, a gapper. Ended up ripping about 40, 45%, 50%. So nice opportunities both ways. There should be another trade right off the open, maybe within the first 30, 40 minutes. And then I'd probably leave it alone, because each day it's had a nice big move, pulls back, and then that slow grind. So the only thing I could probably have done better the last 2 days is just get long, when I cover. But reactive trade there, we'll see what happens, and hopefully offers another good clean move like it has the last two days. GOTU still a watch. Yes, it's overextended. Does it have to pull back? No. We've seen these before. I talked about Tiger this week in the room, where way back when it first took off. You never want to underestimate these kind of moves, because they can go and go and go and go a lot further than you think. I'm not suggesting that GoTo is going to do that. What I am suggesting, though, is when you sit there and you say, hey, this doesn't make sense. I'm going to swing this short because it's run up too far. I just want to remind you of that chart, that's not a good strategy, on these types of trades. Because as we know, China type, basket names are very, very difficult to try to, trade contra trend. So that said, GoTo and Tal. Tal was the main focus for me on Friday. You guys know I've been watching these. You guys know I've been setting price alerts. Tal came. Tal was my focus. Why was it my focus over GoTo? GoTo was barely fading, and maybe I could have made more if I put more size on, because if it followed Tal, then it would have broke down faster. Well, GoTo had relative strength, so it's something that I don't want to focus on. I don't want to be sizing in when something has relative strength. If Tal. If Tal came back, GoTo would probably rip back just as fast, if not faster, because of the relative strength. I want to focus on the names that have the weakness, the ones that are proving me right. If they're proving me wrong, I should not be adding, I should not be scaling, I should not be fighting that trend. I should let them do their thing, because I did not have a good read on it. However, Tal, if I've got a good read on it, I should be adding and scaling into that trade until it gives me some sort of warning sign like, hey, it just either flushed out, it's consolidating, starting to reverse trend, but let that trade work. And for whatever reason, we always as traders tend to focus on the stronger names, because we think we're going to make more, right? We think we're going to make more when they actually pull back. Meanwhile, you should just focus on the names that are in trend, that are doing what you expect. Don't focus on the ones that are going crazy, that are not doing what you expect, that are going far beyond where you thought they could go. So anyway, with that said, go to TAL, higher the better, failed follow through, and we'll see what happens with those. Last one that I would be focusing on is Tesla Q, TSLQ. So obviously, Tesla continues to unwind. I am of the camp that it doesn't have to bounce on your timetable. Nothing happens on your timetable. This is a huge move, huge volume. This needs to get digested for a long time. Can it go to 135? Sure. If it goes to 135 fast, I feel like it's going to come right back. It reminds me of something like, CVNA, right? Where everybody gets all excited, and then here comes the bounce, and then reality hits back in. Or right over here, where it's got to kind of consolidate, and then everybody's like, all right, here we go, and then bam, more lows. Point is that Tesla's got so much retail in it that it's not going to go by the timetable that you expect, and you just got to stop waiting to try to time that bounce. It's fine to scalp here and there, but if you want the big move, wait for it to have the big move, because the big move is going to have another big move right after it. And I just feel like a lot of people are going to be trying to bounce it, and it's going to be that continual loss. That said, you could say I was maybe doing the same thing on TAL and Go too, where you put on a small amount and you wait for the trade to come. It doesn't come. Okay, you lost that day. Next day. I guess the point is that just don't waste energy. If you find yourself going and just getting exhausted from trying to find this bounce, just understand that, look at TAL day. When TAL unwound, it already was fading, and I just joined the trend. I didn't need to wait for it. I didn't need to, start in and scale and get chopped up all day. I waited for it, started to fail, added, and that was that. Failed follow through side. So as you guys know, failed follow through, I'm just looking for higher the better, and then failed follow through. Failed follow through would be, retesting prior level and then starting to put in a top at the lower end of the channel, and then it starts to break down after that. Then you start to use your risk based on either the lower, mid, or high channel, depending on what size you're in and how aggressive you want to be. EJH, obviously one that we've been watching. We know that this has a history of these big unwinds. It's had a crazy move in the past. Right over here, you can see. So you don't forget those things. And we saw it walking up, steady, and then they unwound. And we know that these things are not lasting as long lately. WNW, you guys all knew that this was the walk up, and so we've been kind of watching it from here. Flushed out this day, they started to do it again. Ripped it up on no volume, and then here we are at 20 cents. It was just at $2 and whatever, $2.50. And then we had the other one, YGMZ, which same deal. We knew they were walking up. I pointed it out the day that they had all those 50K blocks at 4 a.m. That was in the twos. They walked it up, did the promotion, and it's right back to the chart support. So that's really been the key. Is usually when they do unwind these things, they let it come right back to where they caught it the last time. So EJH, hopefully higher the better. I'm thinking then it probably goes towards 20s, 30s, back to with the lows over here. 9, I'm gonna just have a watch on it. They had an S1 or S3, I forget which one, on Friday. It came in a tiny bit after hours on low volume and stuff, but maybe we'll start to see it fail to follow through. So set some price alerts there. In my opinion. XPON, this one's been a great trader after hours on Thursday as well as on Friday there. It offered a great move pre-market. It had that 235 support that was kind of found on Thursday night. And then we had the gap up, retested towards that, blew everybody out. You can see this failed follow through momentum basically setup that we've gone over. We've talked about it multiple times in the last Sunday videos, kind of seeing that common area of support, which was, in this case, around the 3s, and then it finally broke down, consolidated in this area, blew out back towards that prior level of support, comes down, retest, and here's the rejection candle that we need to see in order to have confidence for the next leg down. So anyway, I feel like this is super crowded, but I do think that we could have maybe one more trade off of it. Hopefully it gaps up and kind of tests towards the 250s level. And the reason I have that is just looking left, look at the prior level of support, became resistance. And that lines up with, I have 248, but 250s essentially, plus or minus a few cents. So anytime that I'm ready and prepared in the morning, I want to see it gapping up, or at least use that as my guide to risk. Exhaust into that level, fail to follow through, and go from there. ACER, possible sell the news. There's two things here to kind of consider. One, we had a huge retail run up, and it already had been running into this, and it basically came from $1. So if it does have morning strength or starts to fail, we could be looking at a fade back to daily VWAP if we wanted to. That said, just keep in mind that it's not always, just because it has a retail sell-off does not necessarily mean that that's what it has to be, right? So this day we got positive news, and actually it was this day. We got positive news this day, and then the next day it completely unwound, right? So we had this huge gap up the first day, unwound, they saved itself, and then it ended up unwinding the next day, but it got caught. My point of telling you that is just because this might become a sell the news setup, in the sense that, if it gaps up tomorrow and then it fails to follow through, maybe there's a nice unwind trade, right? But if it starts to find a bidder, if it starts to find a trend, just be aware, PRVB is at the highs since they had their news. But the days after the data came out, it was pretty weak. It was a sell the news setup. So the point is just don't get too aggressive thinking that it has to continue to sell. Let it prove. It very well may. Maybe it goes to 2, maybe it goes to 1. But I'm not suggesting that, but what I'm suggesting is that if you do nail it and it unwinds and it starts to show that it wants to break out, wants to rally, accept that. Because as you can see, sometimes those sell the news setups just turn right back around. EDSA has been a great trader. Ideally, more setups like this. We had 2 great exhaustion days in a row, right over here and over here. So that was a good one in the room on both Thursday and Friday. But you can see we got a little bit of support around, pretty much 2, and a little bit of the resistance around, we'll call it 220. So ideally, 220s blows out, let it do its thing, let it dance around, and then once 220 starts to reconfirm, that's when I'm going to start to get interested for the fade. Other than that, we've got FREQ. Nice breakout here, no position, just a chart, daily chart that I really like, and you can kind of see looking left, we are at, that big level. So if we do start to see, rally start to firm up over 260s, then we have the potential of continued breakout. VAPO has been continued to prove. This one, as you guys know, I kind of compared it to Kaba, which I screwed up. I was long here, 170s. I think I've said that every week now. And it hit over 9s the other day. Finally came in on the intraday. But point being is, similar kind of breakout chart. We'll see. Again, if it fails, we're at resistance here, right? We're at a level that it's had trouble quite a bit. If it fails and it continues to fail and it does not break out, does not mean just hold it and hope for the best. You should already be locking in if you want. It's already been up 50, 60, 70 cents here, but about $1 per share after the high on Wednesday. WDH has been one continuation side. I will not long it, but I'm watching for the failed follow through. This is another one of those walk-ups. So, we talked about YSG going. We talked about WDH, and I think there's a ton of other names that have been kind of sneaking up, but I just radar them all. I set price alerts, and I have a scanner that scans for any abnormal volume on them. So that's why I always have them up, just like SISI. Same deal. You can see this is getting walked up right now. You could also go back and just look at the history and see that this is not the first rodeo, right? Huge volume day, right? This is where, big volume day, 14 million, consolidates, and then just steady go. Well, we've done that again over here. We've got some, volume build and it's just been steady, straight up. But let me get rid of this real quick. Remove all trend lines. Right over here. So you can see huge volume day, fades off, and then straight up. And then you can also go back over here. You can see they did it again. So you have to see the past, realize what it has a tendency of doing, and we know this one's just a matter of time. I won't long it, but again, it's just a matter of time. So that's about it. I've got VKTX. I don't really have a plan on it. Just, it's worth seeing. It's been straight up for quite some time, so keep an eye on it. Got ISO. ISO is a deal name, so it's kind of hard to make a decision except intraday. APCX, really nice squeezer. This is one that was a pretty squeezy daily. This is a nice little setup that we talk about. T+2 move, and now we're consolidating. If it holds over 250s, we could continue to go, but see what happens. So, set price alerts, be patient, cautious over sizing. You'll realize that you'll be a lot more patient if you don't try to size up on everything, right? Sometimes people want to size up. They want to continue to scale into their trades, but just remember that the scale-in trades are the ones that you're prepared for, that are the A-plus type setups, the ones that you have high confidence. It's not, all right, I want to scale up. I'm just going to go, extra size on every single trade. I save the size for the ones that I'm extremely confident for, the ones that are into my wheelhouse as my A-plus type setups. It's not every single name that I just try to scale, as large as I can get into. That's not my goal. My goal is to scale on the A-plus setups. And if you don't know what your A-plus setup is, go through what you're best at, what you perform best on, and continue to fine-tune that until you understand where you perform your best. And that's where you should be putting most of your money towards when, the stats back you up. So I think that's it. Have a good rest of your weekend, and we'll catch you in the room tomorrow.